Good morning, my name is Greg Boland, bringing you a stock market update on Monday the 12th of January 2026. The market has rallied, particularly in the US over the last week, up 1.6% in the S&P 500, while in Asian markets the ASX 200 was down 0.11% and the Hang Seng down 0.4%. The S&P 500 hit all-time highs on Friday, ending at 6,966, and it's definitely broken out of that 6,500 to 6,900 range that it was in between beginning of September through middle of December. So it's finally broken well higher than that. The Dow also ended on a high. Amongst the index, Intel was up 11% and Vistra Energy was up 10.5%. Vistra Energy and Oklo signed contracts with Meta on Friday for the provision of electricity to Meta data centers, and that's why that stock was up. In commodities, oil was down 0.5%, while gold was up 0.7% and silver up 3.9%. Interesting, this week we've got CPI numbers in the US, which will be show whether the Federal Reserve may lower rates, and the FedWatch tool provided by CME is now showing chances of rate cuts in both April and July. Also this week we start reporting season, so it's moving really away from the macro story to individual company story. And JP Morgan reports on Tuesday night, our time, followed by Bank of America, Citigroup, Wells Fargo, Morgan Stanley, and Goldman Sachs this week. The largest fund manager in the world, BlackRock, also reports this week. What I'd like to do now is focus on part of the market which is related to AI, which people sort of forget about. Everyone thinks about the AI story as the chip makers such as NVIDIA and Broadcom. They also think about the data, the clouds providers such as Amazon Web Services and Google Cloud, and also individual software such as OpenAI and NVIDIA, and Palantir. But it's changing from a Silicon Valley story to a macro story globally. And the biggest part of that story is the provision of electricity to data centers. The data centers require advanced cooling, they require large-scale construction. But one of the things that we're focusing on here really is electricity demand. And those that deal with Vistra and Oklo by Meta on Friday is a prime example. Indeed, the International Energy Agency believes global demand for electricity will increase by 3.7% in 2026, mainly due to this AI need. So these data centers require advanced cooling and huge demands on electricity. And some of the data centers, the electricity required rivals that of small cities in the US particularly. So AI sector energy demand is likely to increase 30% this year, according to the International Energy Agency. And so therefore, any of these energy stocks are something to be looking at. Vistra, Oklo, and perhaps GE Vernova, which we'll dwell on shortly. US, China, both account for about 80% of the growth in data center electricity demand over the next 4 years, while in Australia, data center energy demand is projected to be 200% higher by 2030. So why is all this important? Well, there's obviously global concern about the ability to meet these demands, and therefore wind, nuclear, and other types of electricity generation is very much to the fore. Nuclear energy in the US, stocks such as Constellation, grid operators in renewable energy in China, such as CSI Global, and locally in Australia, energy suppliers such as AGL become a key focus for investors. One way of getting exposure to this whole AI infrastructure is through exchange-traded funds, and one listed in the US, the Global X Artificial Intelligence Infrastructure ETF, provides global exposure to this sector, while Volt, obviously, looking at electricity, VOLT, the ETF, also is a good example of what you can do in terms of investing into this energy sector. Both saw big increases in value last year, and we think that will continue this year. When we think of ETFs as well, maybe something to think about is not only the S&P 500, trading things like the SPY and the VOO, but looking at total world stock ETFs, such as the VT, which is offered by Vanguard in the US. Its return last year was up 23%. So why look at something like that? Well, last year the S&P 500 was up around 17%, but the Nikkei and European markets were up in the mid-20s. So getting exposure to a whole basket of stocks rather than just a focus on the US is something that investors should think about. This ETF, the Vanguard Total Stock World Stock ETF with a code VT, is based on the FTSE Global Equity Index, and it covers a huge range of stocks. It's an easy way to diversify, but still gives you access to key sectors. Goldman Sachs believes that global equities are likely to increase by 11% this year, which is sort of in line with the S&P 500, where some people are saying that the market will go from where it is now, 6,966, to 8,000 by the end of the year, which is a similar sort of increase. So why look at the VT rather than just, say, a US ETF? Well, the US ETF is dominated by the top stocks, whereas the VT gives you global exposure, but it's still 63% of the holdings are in the US. Other stocks to think about perhaps are Codan in Australia. It's an industrial metal detector maker. It was up 28% last week because it gave guidance of first half revenue of $400 million. This follows being up 140% last year. It supplies mining, military, and the like with metal detection infrastructure. Analysts rate it as a buy. The last stock I want to focus on is another stock in the AI infrastructure area in the US. We've mentioned Vistra, we've mentioned Constellation and the like, but one to think about is GE Vernova. The stock was up 70% last year. It's down a little bit this year, but it's the most valuable nuclear company in the US with a market capitalization of 169 billion. There are some concerns that it's facing greater competition, and that's maybe why it's down slightly so far this year. But GE Vernova sees AI as a key sector, and analysts are rating that as a keen buy in the US. So good luck with your trading this week. Focus on the CPI numbers in the US and the banks reporting as they start tomorrow night, Australian time, with JP Morgan, followed by Bank of America, Citi, Wells Fargo, Morgan Stanley, and Goldman Sachs.